Good morning from the For the See Me. This is Chris Robinson with your Traders Exclusive comment today. We're going to focus on the grains, and then I'll talk a little bit about the livestock. Well, post USDA report, the biggest surprise was the large number of acres of corn that are going to be planted. 93.6 million acres of corn. Quite a lot of corn on tap. Now, will we actually plant those? A lot depends on what happens. If farmers decide to plant more beans instead of corn. The initial reaction after the report, though, was very negative for corn. We had about a 17, 18 cent break. Now, the funds are still short about 160,000 contracts of corn. Moving over to the wheat. The wheat, the biggest surprise was actually the decrease in acres. About 2 to 3 million acres less than was expected. It looks like we're going to plant about 5 million acres less overall acres. So that's something I think that moving forward, you're going to have to watch what happens with those extra acres. And then finally is soybeans. Soybeans have been on a great rally. 80 cents off the bottom, really in the last 4 weeks of trading. We saw that rally fueled by the funds flipping from being short 50,000 to now they're long about 75,000 contracts, close to 80,000 contracts of soybeans. So that's something that I always talk about. Watch the money flow. And that flip was a great opportunity if you were watching the Commitment to Traders, where you could benefit from that money flow. That's something I watch quite a bit. Now, we've come pretty far, pretty fast with these soybeans, making the highest prices we've had in the last 8 months. I would not be surprised to see a little bit of backfilling somewhere along the way. There's still a lot of time between planting and harvesting. Now we're really going to be at the beck and call of the weatherman. And other than that, I think that's what grain traders are going to be focusing on. We know we've got large acres in corn. We know we have large supply, large carryout. So all that's been factored in. Remember, this is a futures market. So when you look at these prices, that's already been discounted by all the buyers and all the sellers, all the fundamental information. It all comes together. Moving forward, we've got a report on April 12th, another USDA supply and demand. That may give us some movement, may or may not. Those reports are nice. Those report days are nice because they give you a fulcrum point where all the bulls and bears will focus on what other numbers are released, and it'll give you, again, opportunity for the market to move. Switching over to the cattle, the livestock. Take a look at the trading range we've had in cattle. Right now, the funds are long about 30,000 contracts. We've had some good volatility. There's a major trend line in August feeder cattle. If you take a look at it, it goes back to the December lows. We hit the February lows. We're right there, roughly around the 150 level. If that was to fail, you may see some adjustments of the fund money. Those big trend lines attract a lot of activity, not only for the bulls and the bears, because when it hits the trend line, you've got a decision point. Do you want to buy it and look for the bounce off the trend line, or are you going to sell it and think that it's going to accelerate through the trend line? Something to watch. Pull up that chart of feeder cattle. And I think that's really about it. I could talk a little bit further. If you've got any more questions, or if you're looking for help with your trading or your hedging, you're speculating, look me up on the web and give me a call. This is Chris Robinson. Have a great day.